All right, let's have a look at some energy markets. Quick rundown on where we've come from, where we're at today, and a few little things that have happened. So, look, this is the ASX base coal futures paid for 2027. This is contract signed between May last year and May this year for the next term. And we've obviously got each state that we're looking at. So what I wanted to run through quickly is where we're at today, what's happened most recently, and what the outlook looks like over the next little bit. So basically, if we want to look at New South Wales, since May last year, fairly flat run, sideways movement of pricing up until basically middle to end of November, late last year. What happened is there was news of the delayed closure of the Eraring power plant. Retailers have been pricing in a premium based on what that lack in or drop in supply would have brought to the market. Given that closure's been pushed out, it looks like pricing is eased because of that news, as well as some renewable assets coming online to increase the current supply in the market as well. Look, I actually wonder whether the slowdown in construction has potentially had some effect on this as well. We all know that there's not a whole lot of new building sites coming out of the ground, certainly in Brisbane CBD anyway. But construction costs are causing issues for new builds. But either way, what we've seen is a bit of an easing in pricing there, back down to sub $100 a megawatt hour. Now, if we look historically, again, this is the New South Wales market. We haven't been sub 100 basically since February 2022. And prior to that, the markets was actually pretty good. What happened there was, this is the conflict in Ukraine, the war in Ukraine, caused pricing to go through the roof for a period of time. And we never came back down to below that point. So what we can see here is a steady trend line upwards from July 2020 right through to today. Now, we've obviously got this other little blip sitting right here in front of our faces. This is our friend Mr. Trump over in the US throwing bombs around in Iran. That caused price spikes immediately, basically of wholesale spot prices in energy, fuel bowser, basically anything you buy is now costing more, and in a very short time period. What's good to note, however, is how quickly everyone's forgotten what's going on in the Strait of Hormuz, or how much of an overreaction that initial price spike was. So basically, end of Feb, shot up from what looks like about $95 a megawatt hour in New South Wales, right up to 111 at the peak. And very quickly, again, that's come back off the boil. What's interesting to note about this is we're now sitting back at that $100 a megawatt hour mark on a downward cycle, which again, if we're looking at that long-term trend line, we haven't seen pricing like that since Feb 2020. What we think is Spinifex is that's a buying opportunity for large market energy consumers. Locking in for your next period now would give you some easing in terms of budgeting for your next term. Are we in a good buying spot? We think yes. And that's basically the same in every state. Obviously, Victoria didn't see the significant drop that we did in other states, but their pricing was already, sub $75 a megawatt hour during that time. And we're obviously nearly below in Victoria, that 12-month historical, same in Queensland, well below. And that's nearly come back down to the lows that we saw in February last year. Interesting to know how quickly markets forget and how sharply that drop's been over the last couple of weeks. So hopefully there's some interesting points there for you to chew on.